semiconductor companies have really taken off in 2023. NVIDIA is the highest performing Magnificent Seven stock, and a lot of other semiconductor companies like Broadcom have really done well in 2023. But one company that's lagged is Qualcomm, and their stock's actually down if you look at the year in review. So I wanted to take a look at Qualcomm and see if it's a buying opportunity. And the stock was down 7% yesterday. So I wanted to take a look and see, is it a good time to buy this dip in a high quality company? Qualcomm's been a really good company for a long time. My name is Victor. I have an MBA and a lot of business experience, and I like analyzing companies, taking a look at them and seeing if it's a good investing opportunity. In this case, I'm gonna look at Qualcomm. Do me a big favor and like this video and subscribe to my channel. I'd appreciate that. Now let's take a look at Qualcomm. I've developed a process over the years on how I scorecard a company stock and decide whether I want to buy, hold, or sell. I want to know that I want to be part owner in the company and that I want to be in the industry that they operate in. I want to know that the management team's doing a good job operating the company. I want to know that debt is under control and less than 3 times EBITDA, and I want to discount on the stock. The best way to make money in stocks is to buy when stocks are discounted. Based on those questions and the answers to those questions, I buy, hold, or sell. Qualcomm is a big success story. Their real operation is around the mobile networking, phase of technology. If you look at the original mobile phones, they were a player and they actually used to produce a mobile phone, but they quickly got out of that because their core competency was the chips that powered the mobile communications, both for consumer mobile communications. Today, you would find their chips in the iPhone, but also commercial capacity. So as businesses want to go to 5G and connect all these big devices and big machines to a network, Qualcomm is a big player in that business. They also do a lot of military. So you find a lot of their technologies in military capacity. So the company's been a huge success and a real big player in the semiconductor industry. The company's net income has been going down. Their overall revenue has been down. If you look at their income statement, revenues for the first 9 months of their fiscal year are down quite a bit on the equipment and services, which is the chips going into iPhones and other products. Licensing's kind of held up better for them, but overall they've gone for the first 9 months from $32.8 billion down to 27.1. I think that's one of the reasons why the stock's been down. They've been profitable, which is very good to see. They have a good net income, so they continue to be profitable. I think they need to start growing the company, and then the stock will really respond to that. Good thing to see is that they have been buying back shares. So the number of shares available have gone down. So it's good the company's buying back shares. Comparing Qualcomm to other semiconductor companies, you can see that they have fallen behind with regard to their stock price. Their stock price is down 9% over the last year. NVIDIA is just a rocket ship. It's really taken off because of the whole AI craze. Even Intel's had a positive 12 months, but Intel's just been a basket case. I owned Intel for a number of years and really got hurt when they went down. I lost some money on Intel. So although they're up for the year, I still think that's a shaky company. But as you can see, Qualcomm has fallen behind, which is interesting. Now, if it's a quality company and it's discounted, I'm interested. So I'm interested if it's a quality company. Their PE is nice and low at 14. That's attractive to me. When you look at NVIDIA, they're at 45. And even Intel is at 59. Holy smokes, that's a big PE. So overall, Qualcomm may be presenting a discounted opportunity, but we got to make sure that their financial shakeout, we got to make sure that the company has a good plan to grow. A reality that Qualcomm is facing is that smartphone sales are down. If you look at Q1 of 2023, the number of units sold collectively in the industry is down. So you can see that it's gone down over the last 6 quarters. And although the Apple iPhone has really held up better than others, I still think that downward pressure is going to affect iPhone and it's going to affect Qualcomm. And I think you saw the drop in revenue in their income statement is reflective of how Apple's not producing as many iPhones. And I think the big drop of 7% yesterday was due to the Chinese government banning iPhone from government employees. That's similar to what the US did against Huawei, which is the big Chinese smartphone manufacturer. The US government banned employees from using it. And then I believe the Huawei device is banned in the US altogether. So a little bit of tit for tat, the US and the Chinese government. But overall, it's expected that the iPhone sales are going to drop, and that's what's driving down Qualcomm's revenue. The balance sheet's really strong. They have debt of 15.4 billion, but they produce EBITDA of 15.8 billion. So in basically 1 year, the company can really focus and pay off all their debt. They wanted to, but they have a good cash position of over $8 billion. So really good cash. And so it's a very strong balance sheet. Cash flows for the first 9 months, the statement of cash flows shows that the company's really keeping their free cash flow nice and high. Even though revenue is down, their cash flow, actually, their free cash flow, just barely increased. But that's really nice to see that even though with lower revenues, the company is maintaining a really high cash flow rate. I'm not going to use the 9 months and annualize it. I think it's not conservative enough in my valuation. I'm actually going to use an average across the last 3 years in my valuation. I believe Qualcomm is currently discounted 13%, and I get there by taking the net present value of their expected free cash flows and also looking at their earnings per share and valuing Qualcomm on those two methods. The first method I'm going to go over is discounted free cash flows, and I'm taking the 3 year average. And the reason for it is I don't want to be overly optimistic. As mentioned, the 9 months in the current year look really good, but that would give me a higher number, and I don't want to do that. I want to take the 3 year average, which gave me a lower number as a starting point of $6.6 billion. I think it's good to be conservative right now. Qualcomm's got to regain their growth trend, and then their stock will do something. Now, the 3 year average free cash flow is 6.6 billion. I'm going to grow it by 5% for years 2, 3, and 4. And then the terminal value is going to grow at 3%, meaning all cash flows after year 4. I'm going to discount the company at 8.5 as a weighted average cost of capital. And I'm going to get a value of $118.8 billion for all free cash flows we expect in the future for Qualcomm. The cash on the balance sheet is 8.6 billion, and the debt is 15.4. So I'm going to deduct debt and add cash to that value and get to an equity value of 112 billion. The market cap for Qualcomm is 130 billion. So looking at those numbers, Qualcomm is actually sold at a premium of 6% if you compare the value of the company based on free cash flows to the current market cap. So that's interesting. Earnings per share is going to be good. It's 9.7 was what I'm using. That's my expectation using analyst expectations. PE, I'm using 21, even though I can go higher than that. I wanted to go with 21 and grow at 3%. And based on those figures, I get a stock value of $159 per share, but the stock market will sell you 100 shares at $106 per share. So using the earnings per share method, Qualcomm offers a 50% discount. That's a pretty attractive discount. And if I blend the two, I put more weight in free cash flow method. I take a 2/3 of this figure, 1/3 of the earnings per share figure, and I get to a 13% discount on Qualcomm. So let's scorecard Qualcomm. Uh, would I want to be a part owner in the company? Do I like the industry? I do. I think the management team's doing a really good job of operating the company, and debt is under control. They offer a discount. Now, I'm going to be a holder of Qualcomm. I wouldn't be buying more shares, and I would want a couple of things to happen before I would go turn into a buy rating. Um, and one of those is I want to see a plan to grow, and I want to see some evidence that they're beginning to grow. That's important. And the other factor is that I think the semiconductor space right now is inflated. I think the prices are high. If you look at Broadcom, I owned Broadcom up until a month or two ago, and Broadcom just shot up in value just overnight on this theory that AI is just going to be this amazing, new part of our economy. And it may, but it may take 10, 20 years to get there. And boy, that'd be a long time to wait for that type of business to uh, come together. So I sold my Broadcom stock. I took a huge gain, and thank you very much. I made money, and now you see that Broadcom's kind of flat lined over the last couple of months. Nvidia is another example. I think Nvidia is great, but there's no way I can value the company at the Nvidia stock price right now. So where I'm going is that I think that Nvidia, Broadcom, and other semiconductor companies, I think those stock prices are going to fall. And when they do, it's going to put pressure on Qualcomm as well, because the whole sector of semiconductor companies will begin to fall together. So I'd be careful in buying Qualcomm. None of this is financial advice, but I'm going to be careful in buying Qualcomm stock so that I don't get caught up in the whole sector is going to be struggling because it got pumped up so high here in 2023. So Qualcomm is had its stock price go up and down, but trading within a band. And you saw the big drop yesterday of 7%. I mean, that's a pretty good drop, and I don't think it was warranted. They've already seen their stock kind of go down with the decrease of iPhone sales. But you can see that it has significant fast drops in the stock, and it has very fast rises. So it's interesting that Qualcomm is experiencing that. I have a value of the stock of $120 per share. If I see the stock price continue to drop, it's going to become more attractive to me to invest and buy some shares. Over the last year to date, they're down about 0.75%, and they pay a dividend of 3%, which is nice. So Qualcomm is a great company. I think they're going to be around for a long time, and I definitely want to buy their stock when the time is right. Using good valuations and a good strategy, having a long-term vision. I think Qualcomm could be a good investment. And then averaging in my buys into Qualcomm is also going to be a good strategy. But overall, I'm tracking Qualcomm because there's value here, and especially if semiconductor prices start to drop altogether, semiconductor stock prices begin to drop, it's going to offer up an even more attractive proposition on Qualcomm. So I hope you enjoyed the video. I hope you found it interesting. Please leave a comment. Love to hear from you on what you think about Qualcomm. And again, do me a big favor and like my video and subscribe to my channel. Thank you so much. Good luck investing in 2023.